Okay, thank you so much for being here. My name is Laurie Savino. I am with Corcoran and I sell both New York and New Jersey. James, why don't you introduce yourself?
Sure. Thank you very much, Laurie. You said it just as I put a mint in my mouth.
Sorry.
Forgive me. Hello, everybody. My name is James Murphy. I'm a senior loan officer, a sales manager over at Advisors Mortgage Group. I'm going to talk to you a little bit about getting pre-approved and getting ready to move forward on buying your first home or your next home. Either way, the process in itself.
Great. Manny, why don't you introduce yourself?
Hi, good evening, everybody. My name is Manny Stratakis, and I am from Summit Property Inspectors. I am a home inspector, which is an important step in the home buying process, and we'll talk about that a little bit later. We just want to welcome you.
Exactly. What's really great is all of us are licensed in both New York and New Jersey. So wherever you're from, we have your back here, which is great. Okay. So our agenda today, well, obviously we've welcomed everyone, our introductions. So we're going to talk a little bit about the art of the deal. What does it talk about when we mean that you are going out and you are trying to buy your first home, which is scary, I know, and there's a lot of steps. But when you surround yourself with experts, then it makes the transaction much, much easier. And when you have someone that's very well versed in each one of us, which we are, both James, Manny, and I, it really helps it. We're going to go through the mortgage process. We're going to go through the inspection, and we're going to talk about getting you to the closing table, which is the most important thing. It's not only actually picking out a house, putting an offer in, but a lot of things can happen during that transaction. And then we'll do some questions and answers at the end. So, what's the art of the deal? Well, let's talk a little bit about the buyer commissions, the buyer agent commissions. I know that you've probably heard a lot going on in the news about the decoupling of commission, and this is something that's really important. I'm also going to put all the documents that we are going over today in the chat so that you can have them. And so typically before, the seller would always be paying the buyer's agent commission and the seller's agent commission. Now it has changed, it has decoupled. And what does that mean? That means that a seller doesn't have to pay a buyer's commission. In a lot of situations in where we are between New York and New Jersey, a lot of sellers are still doing that, but they don't necessarily have to. So that means that you may have to pay your buyer's agent. And these are all really great questions and answers on what does that mean and what does that happen to you in terms of your sale. And so we will go over this in detail. And one of the things, because now you should really interview your buyer's agent, right? You shouldn't just want to show up at a property and work with an agent that you've never met. So it's really good to interview them and make sure that they can help you get to the closing table. And this is a document I created called the Exclusive Home Buying Experience. And it's about 85 different points that I do within a transaction from the beginning, from when we first meet, all the way to getting you to that closing table and beyond, because it doesn't stop there. I'm always available for any kind of questions that you may have about your property. Once a year, I will give you an evaluation on your property. So our working relationship continues. And even though there's about 85 of those, we have something called a partnership commitment, because if I'm going to give you those 85, we're asking you for a couple of things. And one is that it's been exclusivity, working together, being on time for appointments, things like that, that really, really help us to get you to the closing table. Because sometimes when we're scheduled all day and we're seeing 5 or 6 properties, it's important that we are in time. So it's a great document to read through. And this is what you are going to do before you actually hire an agent. You want to make sure that you're interviewing, you want to make sure that you're asking them the questions and they have documents that are similar to this one. And then I have a lot of buyer guides. So if you see, I have New York, I have New Jersey, I have house, but maybe you're buying a condo, maybe you're buying a co-op. I have all different ones depending on what yours is. And so you can write in the chat and also tell me which one you may want. And it goes through the whole process from start to finish. So even though you have me to go through it, this is a great document to kind of hold, put into a binder, and you think, okay, I put an offer on the house. Well, what's next, right? And that's something that's really important where we start from. So this is what's called a buyer's map. And it is different in between New Jersey and New York. So for New York, we just sort of write an offer and then we go into attorney review. We'll do an inspection then, but in New Jersey, we actually write a contract. And you don't get to do an inspection until after you're out of attorney review. So it's really different and it depends on what's going on. And I have a map for each process. Like, so whether it's a townhouse, it's a co-op, it's New Jersey or it's New York. So it's really, really informative and it's something for you to kind of go through. Hold on. Wait, oh, sorry. I think I did. Okay, so what about negotiation? This is something that's really, really important when it comes to buying your house, because I am actually a certified negotiator. And what does that mean? We're going to make sure that your offer stands out. I'm going to make sure that your offer gets accepted, which is really important. And this is the type of things that having a seasoned agent will make a difference. So this is a little bit of my seller presentation, but the negotiation goes on both ends because you want an agent that's really going to be able to get your offer accepted. And I can promise you I can do that. This is one of the number one questions, and both James and I will go through this because I'm sure it'll come up in his presentation as well, is what are my closing costs, right? And here's New York and here's New Jersey. So it will go through every single item. The only thing that's not in here is sort of attorney fees and commission, but it's a really, really good chart. It'll give you a close amount and you will know how much do I need to save, because it's not only that you have to save for your 5, 10 or 15, 20% deposit, you also have closing costs. So here's what are the closing costs that you'll have. And it's also broken down by seller and by buyer so that you can actually see how much is being paid on both sides, because it's really, really important to be educated and know and understand the whole process. Okay, so Manny, this is Manny Stratakis from Summit Inspectors. He's next.
Hi, everybody. Thanks, Laurie. First off, I want to thank Laurie, too, for putting this together. This is a great opportunity to collect a lot of information, and especially if you're going to be looking to go into the housing market this spring. It's probably going to be very busy. There's going to be a lot of competition. So I want to congratulate you guys that signed on tonight to get a jump ahead of everybody and learn a little bit more about the process. This way, you're a little bit more educated. You kind of know how to navigate through your real estate transaction. It's a really good thing, and thank you all for coming. You could flip to the next slide. Like Laurie said, first off, I've been doing home inspections since 1999. We are licensed in New York and New Jersey, so it doesn't matter where you're going to look for your potential future home. We can service both those areas. We are a multi-inspector firm. That means that we have more than one inspector, so we have a lot of capacity, and it's very easy to schedule appointments with us. We have an office staff, and all you do is call up and they will help you and answer all your questions. So as Laurie said, once you get your select your agent that you're going to work with, and you've gone through the process of looking through several properties, the next step is going to be considering a home inspection. And you want to do a home inspection because it's a very important step in the process. It gives you some information on the property that you're buying. So this way you can make an informed decision about that particular property. It's also going to help you uncover any hidden problems with that property. Not some people, depending on your background, you may have some construction background, or you may be knowledgeable, or this is your second home. But it's good to have an unbiased pair of eyes to come in and take a look to help you uncover any hidden problems that might not be visible to you, especially when you're walking. Buying a home is an emotional process. So you kind of have blinders on to everything else except for this beautiful living room or this lovely kitchen. You want to dig a little bit deeper into the bones of the property, and this home inspection will help you do that. It's also going to help you avoid costly repairs in the future. Um, in past competitive markets, there were real estate agents out there that were trying to better their offers by convincing their clients not to do home inspections, which is, in my opinion, is a big no-no. You may end up getting the deal and getting the house, but you may end up with a boatload of problems that weren't disclosed to you prior to you signing that contract. And once you sign the contract and buy that home, the bank doesn't want to know anything. You own it, you fix it. And the home inspection is going to give you that peace of mind. A thorough home inspection, our home inspections, depending on the property, are going to be probably between an hour and a half to 2 hours. We cover all the different aspects of the building. It's going to really give you peace of mind to know whether you're going to move forward or you're going to move on to the next property. You can switch to the next slide. And I'm just going to give you a brief overview of the inspection process. The first two subject matter, I probably should have switched it. Selecting the home inspector probably should have been on top of scheduling the home inspection. When you're looking for or you're shopping around for your home inspector, make sure that you are choosing a licensed home inspector first and foremost, someone with experience. Go through all the typical due diligence practices that you would do for any other purchase. Check Google reviews, so forth and so on, and make sure that that's the right guy that you want to go with. The next step after selecting that home inspector would be scheduling an appointment. Like I said, with our company, it's very easy scheduling. Before our slides come off, jot down our websites and our contact information down below, because you can do all that stuff right on our webpage, scheduling, contacting Nicole, who's the girl in our office and such. It's a very easy process through our company, but that would be the next step that you would do. And then attending the inspection, which is probably the most important thing that you're going to do.
Mm-hmm.
It's not the most fun thing for real estate agents because like I said, it's going to be about an hour and a half to 2 hours, depending on the condition of the property. But it affords you an opportunity to accompany that home inspector through the home while he's doing his inspection, asking any questions that you might have during the course of the inspection. We encourage that. And we also, during the course of the inspection, will be pointing out things that you might not be aware of or that you may need to address sometime in the future. And of course, anything that needs repair or that's in default on the property. So it's a really important step. Those people that don't attend the inspection, when you read the report later on, sometimes it can be a little confusing. Our reports are not really technically written very technical. It's layman's terms. We have a lot of digital photos. Our inspection report you can read in the comfort of your car on your cell phone. You can run off PDF copies and send them to your real estate agent or your attorneys right after you receive the reports. Report turnarounds, and the average report turnaround should be at least 24 hours, 24 to 48 hours from a decent inspection company. If you have an inspector that says to you, it'll be about 5 days or a week before you get your inspection report, that's not the right guy. Again, it's very important to do your due diligence. Check Google reviews, very important when you're selecting your inspector. And then the inspection report. Ours are very easy, very understandable, very computer savvy. You can read it on your laptop. You can read it on your cell phone. You can run off digital copies, PDF copies of the inspection report. So basically, that's pretty much it. After the inspection, after you receive your report, don't hesitate to reach out to the inspector if you have any additional questions. I love when the client calls me up and says, Manny, can you just run over this thing? I'm not, I'm not really familiar with it. And I know you showed me at the inspection. I'm more than happy to go over any part of the inspection that you may not be familiar with. And we're always there to answer your questions further out in the future. You decide that that's the house that you purchase, that you want to purchase. You're really not sure as far as what to do as far as maintenance wise. Our company is there to help guide you through the maintenance portion of maintaining your property way after the initial home inspection. So don't hesitate. And that's about it.
Thank you, Manny. I wanted to actually talk about a little bit, he brought up some great points. And one, as a real estate agent, a lot of agents are saying, not to do the inspection, right? Waive inspection. And it was really hard when there wasn't enough inventory in the market. When we went into COVID, we're still very low, but you always want to do an inspection. And what I always tell my clients to do is just do it for exploratory. And what does that mean, right? So Manny will come in and look at everything. And unless something is really, really wrong, or it's latent, or it's something with the foundation, we sort of say, okay, it's on you and you'll fix it. We don't go after the seller to fix that, because typically when we have enough inventory, you have a little bit more leeway in terms of that inspection. And you're able to go back to a seller and say, can you fix these items? So unless it's something that's really big, we kind of sort of say, okay, we're just going to do inspection for exploratory reasons. So never, ever, ever not do an inspection in your house, right? Because one of the biggest purchases you're going to make in your life. So that's really important. Manny's reports are phenomenal. Once I met him and looking at it, it's very clear. He even has something, Manny, talk about the appliances, and if anything goes wrong with it, it's also like into your system.
Oh yeah, we have several different inspection packages that you can choose from. Some of them include warranties on the building, the sewer, and the appliance recall programs, where we take that information from any of the fixed appliances and we send that out to see if there's any consumer recalls on any of that stuff. That's good for as long as you own the house. So if you bought another barbecue or a new stove or refrigerator or whatever the case is, you can log into the account yourself. You'll have access to that, and you can input that information on those appliances, and it will continue to monitor them for any consumer recalls. Their consumer recall comes up, you'll get an email, you'll get notification on what the recall is about, who to call, and how to address the issue.
Yeah, exactly. It's like Manny has a drone. I've seen, as a listing agent, seen buyers, inspectors showing up with like a long pole and a camera taking pictures, and that's not how you want to look at the roof. You want to make sure that you have clear pictures and you understand exactly what you're purchasing. And Nicole is like phenomenal when it comes and scheduling, and it's just a really, really good working relationship. I feel really comfortable recommending Manny. So thank you so much,
Yeah,
Manny.
yes, we're really technically driven.
Yes.
I like toys, so we use infrared cameras, drones, all that good stuff. To It's an additional tool in our toolbox to provide a better inspection for you.
Right. So when people talk about cost, right, and they think, oh, it's so expensive. I'm like, but in the relation of the price of a house, right?
Right.
It
It's
is so
minuscule.
low, every single dollar. And I always tell a lot of people to do the infrared, because what does that does, it shows you the moisture in the walls. So especially if it's not raining, then you might not see something, right, that's in behind it in the walls, and maybe have dried up, and think, but oh, this looks like it's a problem. It's something that's occurring. I remember doing a walkthrough recently, and because it had been a very, very dry summer, but it happened to rain the day of the walkthrough, and underneath the front of the house, there was water coming all through, and, they hadn't done the infrared, and that we would have known that. So we were going back and forth with the seller. So it's little things like that that are really, really important. Don't skip on getting a really, really good inspector, because that will help you to save money down the road for a very long
Absolutely.
time. Okay, great. Thank you, Manny. Okay, James,
Okay.
up to you now.
Here I am. Well, first off, I want to thank you as well for putting this on. And Manny, that was some fantastic information. I always say that there's two things you never want to cheap out on when you're buying a house. One is your attorney, and two is the home inspector. Because you buy a house, you buy the problems that come with it. So make sure
Thank you. Yep.
and that was some great stuff, Manny. So thank you so very much. Ladies and gentlemen, as I said earlier, my name is James Murphy. I'm a senior loan officer with Advisors Mortgage Group, and I'm here today to give you a little bit of information to help you get prepared, make you aware, and have you ready to buy your next home, if not your first home. So let's move on to the next slide, talking a little bit about the agenda as far as what I'm going to get into. We're going to talk about getting you prepared and ready. And what I mean by that is going through the pre-approval process, telling you everything that goes with it, and kind of evaluating how do we achieve both of our wants and our needs. The next thing we're going to get into is going to be getting you aware and ready. And aware and ready is just about the process as far as, what's involved and what are we doing next here. And then the last one, where did my slide go there, Laurie? What's next? So we'll talk a little bit about what's next. So let's go back to that last slide here. I'll tell you a little bit about myself. Keep going. Well, you're way ahead of me. We're going to go backwards. Hold on, we're gonna go backwards to the other slide. So, and stop. All right. So this is just a little bit about me here. We're gonna talk about where I belong in your process. What just happened there? Got all kinds of technical difficulties. Is it because of the last name Murphy? Is it Murphy's Law that's coming into effect here? It's possible. But anyway, a little bit about myself. First and foremost, I'm going to be your loan advisor. I consider myself an advisor because it's more than just a salesperson. It's more than a loan officer in itself. The mentality that we have on my team is we are here to lead you along the way, guide you through this process. We're committed, dedicated, and we're always ready for you when you need us. So we're going to talk a little bit about that. What I mean by that, we've got 20 years of experience, just myself alone, let alone my team. As far as the mortgage process, I am a first-time homebuyer specialist, and we have spent quite some time helping some people out get their credit situation under control, evaluate their debt situation, and maybe do some consolidation, as well as the investing in real estate. So that's a little bit about me, a little bit about my background. As far as what's next, let's jump in to the next slide, where we are going to get you prepared and ready. Are you ahead of me here, Laurie? You're one ahead of me here. So go back one. No, there it is. That's what we want. Somehow we're out of order, but we'll work through it. All right, so getting you guys prepared and ready. What the heck do I mean by that? Sometimes having what you need and want is all based on how prepared you are for the transaction by the time you get to the transaction. So we always talk about being prepared in a sense where you kind of have your ducks in a row. You know what's coming down the pipe, what expectations you should have, and then those that maybe you shouldn't have that maybe somebody planted in your head. That's not really a reality. So let's talk a little bit about the pre-approval process. When we get you pre-approved for the mortgage, we're looking at getting you over 3 main hurdles. I like to use visuals. No visuals here, but I'll talk about the visuals. So the first hurdle is going to be your FICO hurdle. And really what that means is we're going to get you over the credit hurdle, where we're going to evaluate your credit. We're going to do a soft check so it doesn't count against you. You won't have a hard inquiry or anything that is concerning, but it'll give us a good idea of where your scores lie and also what kind of debt is popping up on your credit report. The second hurdle is going to be your loan to value, and that's going to be based on what percentage of the purchase price you guys are financing. So basically, how much are you going to put down as a down payment, right? If you're putting 20% down, you got an 80% loan to value because it's 100 minus the 20. Putting 5% down, 95% loan to value, and so on. There are minimums. Minimum down payment would be 5% because the maximum LTV, loan to value, is 95. So there is no maximum or minimum amount you can put, or maximum you can put down, excuse me, put down as much as you like. But that's the LTV. And the third hurdle, and really what's going to determine your buying power, that's going to be your debt to income ratio. And that's going to be determined by what percentage of your gross income is being applied towards your monthly obligations, your monthly debt. So we figure out all that within the pre-approval process. We go through an application. We collect some data from you, some tax information, some W-2s, some pay stubs, and some bank statements, along with the credit report. And that's how we can evaluate whether you're pre-approved or pre-qualified to move forward. We do run this process very, very similar to as if we were submitting an actual loan, because to me, it's important to know where you are ahead of time and not have these surprises pop up later on. And once your file goes to an underwriter, there's a whole new set of eyes looking at it. So we want to prepare and have you ready based on what they're going to be looking for. And everybody wants a smooth process, and that's the process, and how smooth it goes is really largely determined by how well we prepare and we get you pre-approved ahead of time. Providing your personal information, um, you know, that's a necessity because that's part of the data that we're collecting to run through, but we do protect that privacy. There are multiple ways to submit this information, either through secured web links or website through our online portals, but there's always a way to send your information over here safely and securely. Everybody needs to be prepared because it's the things that we don't know that surprise us, right? And let's face it, as a first-time home buyer or even just a regular buyer in a new market that we're in, you don't often know what you don't know. So, the team is important because people like Manny, Laurie, myself, we've gone through these minefields, if you will. We know where the mines are. We know what to prepare and what to dodge and what to avoid. So being prepared is important, and it helps you kind of understand what is involved. Why are you doing certain things? Why do I have to write a letter? We're going to be well ahead of that by explaining it before you even get started. Confidence, obviously, everybody needs to have confidence in their offer. So part of what we're doing in the preparation aspect, or part of this transaction, is helping you prepare the strongest or make the strongest offer possible. So Laurie can make sure that your offer is accepted and make her negotiation a little bit easier by making sure that we've structured our offer as best as possible. Now, that's going to be things like having everything ahead of time so we can expedite a closing, maybe offer a fast closing. Discussing what our maximum down payment options are, so we can propose an offer that has a strong down payment, and things like that, of those natures that we're going to be looking at. And then obviously we need you comfortable. Everybody is going to have two different ratios that I look at, or that we talk about, and that's what can I qualify for, and also mostly important to me, what am I comfortable with, right? Because you can often qualify for more than you may actually be comfortable with payments. So we'll get into all that, and then obviously making sure these payments are affordable and what we can do to get them to the lowest possible point, whether that's fighting to get a lower interest rate, shopping around for homeowners insurance, or discussing what our options are with down payment. And obviously we need to have enough money to close. So we want to make sure that we're not just using the funds, all of the funds that we have to close on this. We want to make sure that we're ready to have a little bit of a cushion. Therefore, after we close, we're not stressed or running light on income or money for that matter. So having you prepared through the pre-approval process is a lot more than just asking a couple questions and taking a look at a credit report. We go through the full gamut. We look at all of the financials. We look at the assets. You can do all of this online or over the phone, whatever's easier for you, in person if you like. But we're going to go through all of that ahead of time, so we know what to expect and what we have to be ready for moving forward. All right, let's go to the next slide. No. There we go. Now let's make you aware and get you ready. What are we aware of and what are we getting ready? Well, let's talk about the process, right? So from start to finish, what's involved from qualifying for a house to closing on the house. So the first part we're going to get you is the pre-approval, and that's basically talking about what we need to provide for underwriting, and that's going to be the items that I mentioned earlier: the pay stubs, 30 days worth of pay stubs, 60 days worth of bank statements, 2 years worth of W-2s. Unless you're self-employed, then we're going to ask you the full tax returns, and then also any kind of other identifications like a driver's license or a photo ID. So we get all that, we submit that into review. Once you get out of underwriting, then there'll be a conditional approval, there'll be a commitment letter, and we'll work through that as far as getting you cleared to close. As far as the house hunting and the bidding process, Laura, you can also touch on this a little bit later on. I mean, the house hunting these days can be a little bit concerning, somewhat nerve-wracking with the multiple offers that you'll find yourself making. The bidding wars are getting excessive, or somewhat aggressive, if you will, and they are looking to actually get even worse over time, and that has to do with interest rates dropping. And obviously the bidding wars, that's really just a simple factor of supply and demand, right? There's nowhere near enough supply as there is the amount of demand that's out there. And reality is, as high as these payments are and as high as these interest rates are right now, you have a boatload of buyers. I think the last report I saw was a little over 1.5 million that are just sitting on the sidelines waiting for rates to come down. So as these bidding wars are showing somewhere around 10, 20 or more buyers all in on that offer, once these rates drop, you're going to have a lot more than that come on out. So, we're a big pusher of, listen, if you find the house, you love the house, we'll get you in the house, and then we'll work on refinancing later on down the road when the rates actually do drop. But at least at that point, you would have earned equity, gained wealth and appreciation, and not just be waiting around and saving a couple dollars on the interest rate. So that's the house. So we've gotten you through the pre-approval. We've told you about what's needed. We've talked a little bit about the house hunting and the bidding war process. And now it's the acceptance, right? So we get your offer accepted. Laurie has done what she's got to do. She's done a fantastic job at it. Manny's chomping at the bits because now the offer's accepted. He's waiting for the attorney review so he can inspect that house. But the next step is the offer is accepted. Now we go into attorney review, and the attorney review process is typically around 2 to 3 days, right? Depending on the attorney and what's going back and forth between buyer and seller. And then once you're out of attorney review, we begin bringing Manny into the picture. We get the home inspection. You've got 10 days to do that. I begin the mortgage process. We get going, and we prepare all of your documents, all of your application, loan disclosures, all ready for review by an underwriter. Underwriter reviews it, and that's when we get into the conditional commitment. As I said, prior to getting there, we've got you ready through the inspection. The home appraisal gets ordered. This was supposed to be a funny little play here. Inspection, appraisal, conditions, oh my, lions, tigers, bears, or something like that. But I don't think I delivered that well. So I'm just gonna have to tell you it's funny. Just trust me on that. As far as the next step, we've gone through the underwriting. Our inspection has been fantastic. Appraisal came back where we wanted it to. We're working on clearing our conditions.
James, just can I interrupt you for a minute? Maybe you
Sure.
want to explain to them because there's always this confusion between the inspection and the appraisal.
Oh,
If you
sure.
explain
Well,
the
that's
difference to them.
Yeah, that's a great point, Manny. And I think it often has to do with just the verbiage, right? So
Yep.
when we're talking about an appraisal, there is an inspection aspect of the appraisal that leads to the appraisal report, right? So whereas we refer to as your job as just the inspection, it's a home inspection. That is a completely different process. It's a different inspection type. And then for the appraisal is something where we're not worrying about the specifics of the property itself necessarily, the conditions, the quality, the safety, although that is considered. What this really looking at is what is the appraised value of that home? What is the current worth of the value? Because the home is the collateral for the mortgage. So the appraisal aspect of it is obviously important to the lender and the bank to make sure that the house is worth what they say it is and what we're lending out on. So great point though, Manny. Definitely a difference between the appraisal.
Yeah, there's often confusion between that. The inspection is the condition of the property. The appraisal is the value of the
Yep.
property.
Very straight to the point, Manny. Well done.
Yep.
We get you through all of that, all those minds we get you through. You survived the pre-approval. You've made it through the bidding war process. You've gotten your offer accepted. You are finally taking a breath, and next thing you know, it's in attorney review. The attorney review process goes through smoothly because you've probably accepted one of Laurie's referrals for the attorney, so you're working with someone fantastic. And then we've got the home inspection, then we've got the home appraisal, we've got you in line for an underwriter. The underwriter's reviewed the file. The inspection is satisfactory. The appraisal comes back where we want it, got our conditions, everything is good, and now we move towards the clear to close. The clear to close means we've met all of those requirements, we've satisfied everything that was needed, and now the underwriter has officially said you are approved and you are ready to make your way on over to that closing table. Closing table process is a couple more steps. The closing department, the title company, they all get back and forth. There's always something else. Just when you think you're out, don't worry, the process will pull you back in. But that being said, I'm joking. You'll get to yourself to the closing table, you close, everything is fantastic. Now that you've closed, what comes next? The next part is you enjoy your home and you repair it and you maintain it and you do all that good stuff that's involved, and you know that you've worked with a great team that's going to be here for you during, after the process, whenever you need us. So you always have somebody to call in case there's some question of how can I make this house more affordable, or what is my house worth, and if I want to look at a new house, what could I call, where could I go, as well as how do I fix any of these appliances and other issues, which, Manny, by the way, that's a fantastic service. I don't hear a lot of that. I don't hear that from a lot of different inspectors that I work with. So what's our next slide here, Laurie? All right. I guess that's what's next. What's next is let's talk. Let's talk so you are prepared, aware, and ready to buy. All of my contact information is right there. You are welcome to scan any of those lovely QR codes, write any of that down, take a picture, whatever you want to do with that cheesy mug. Just keep it off your AI, because you never know what people could do these days. But that's it for me. That's pretty much everything I wanted to go through in a nutshell. And I'm ready for questions, Laurie, when you are.
Right. So James, have a couple of things I wrote down as you were talking. One, let's talk about buying power. Why is buying power so important? Because I have, buyers that say, why do I need to be a pre-approved? So I would love to have you weigh on this so that people understand, the buyers, why being pre-approved is so important.
Absolutely. Maybe we can cut this into a little short and you can just send them that link whenever they ask you that question, because I'll address it here. Why is the buying power so important? Well, the buying power is really what separates you from the other buyers, right? And on top of that, it also tells your professional agent like Laurie what she should be shopping for, right? There's no sense in showing you a property that you're not going to qualify for, or you might qualify for it, but it's going to be just outside of your budget, your comfort level, and it's going to be pressing you and pushing you, just more than it should, right? So you want to enjoy your home and you want to be comfortable with the payment. So the buying power is important, because without knowing what your buying power is, Laurie, myself, we can't put you in a position where you are qualified and comfortable at the same time. So buying power is just really based on what your comfort level is, from one point, and then the other side of that coin is what are your qualifying levels. So we're looking at debt to income ratios, and those are maxed out a certain percentage. So typically you're safe around 45 to 49% of your gross income. That's really what we're looking at as the total amount of debt. So sometimes improving your buying power is just a matter of reducing some of that debt or increasing some of your income.
Right.
One
Exactly.
is usually easier than the other.
Easier, right? Exactly. Sometimes it's easier to pay off a little debt. It all depends, but the buying power is just so important, because we need you to be in pre-approved, because you don't want to fall in love with the house and what we call house poor, which you can only afford your mortgage and you can't afford to go out to eat or go to the movies or do some fun stuff, right? And vacations.
Sure.
So we want to make sure that you are in that, and getting pre-approved is a really important part of it. And also with a mortgage broker, they can get you to the closing table, because as working with buyers and sellers, there have been issues with, as a listing agent, where the buyer's agent didn't do their due diligence with their mortgage broker, and I'm calling the mortgage broker to find out questions, and you never want that, right? How many times does that happen? And the other thing I want to talk about is a little bit of appraisal, and the same thing at Manny says in terms. So when I'm writing an offer for you, the contingencies matter. So agents are going to say waive appraisal and waive inspection. And what does that mean, right? Well, we are not totally just waiving them. So until you fully understand, we're not waiving the inspection. We know we're doing full exploratory, right? Now, when it comes to appraisal, if you are overbidding on a house by $100,000, which is happening very frequently now, and then the appraisal falls short, you have to come up with a difference on that amount if it does not appraise, because you have waived appraisal, right? So James, go in a little bit more detail on why your end, and we just had this happen, right, recently, when a house did not appraise.
So we can definitely help out in that situation. So and Laurie, you did a really good job of explaining that, hit the nail on the head, and basically, in basic terms, when you waive the appraisal contingency, you're you can't back out of that transaction because it didn't appraise. And there is no contingency for you there, right? So you are responsible at that point to come up to the table with the difference.
Right.
Unless your down payment is, larger and all dependent upon how far you underappraised, by how much, right? Because these things are based on your loan to value, as I mentioned earlier. So if the house underappraises, what happens? In theory, what happens initially is your loan to value goes up, right? Because the loan amount divided by the value of the property in this purchase process, it's the purchase price that starts. That's how we get that percentage. So if the house, but we have to go off the lower of the two, purchase price or appraised value. So if the house underappraises, that lower number is now what's being used for your loan to value. So your loan to value goes up. Now, if you're starting with an 80% loan to value, meaning you're putting 20% down, but the house underappraises, and now your LTV is as high as 95%. Well, you'd still be okay. You'd have to raise your loan amount to cover the difference, or you'd have to raise your loan to value. But you wouldn't have to come to the table with
Right.
excessive amount of money. It's only when you're putting the minimum
Sort of
down
like
payment.
lay terms, right? So typically when someone leaves 20% down, right? And it's different than if they put 5 or if they're putting 40% down. If you're putting 40% down and the appraisal falls short, it usually typically doesn't matter because you have enough equity in the house now, right?
Right. You're
But
putting
if
nothing there.
right, if it goes all the way down, you're putting 5%, then that's a big difference. And do you have the money to make that up? And that's the part that you really need to have that conversation with your agent and also your mortgage broker so that you fully understand. You're going to say to James, by the way, I had to waive appraisal so that you can talk to him about what does that mean? And
Yeah.
hopefully you'll talk about that before it happens. But if you didn't realize, right, like so that they fully, because they don't understand. I know even when I've explained it to buyers and we go through, I think there's so much going on that they're not really understanding until it happens, until they go through it. And then the question comes up and the house doesn't appraise.
Yeah, especially if we know ahead of time and we keep harping on preparing, right? If we're prepared and aware that there is a minimum down payment, that there is a high loan to value, and there is a chance of this value not being what we expect from the purchase price, then we can do our due diligence and have the house comped ahead of time. Laura, you and I can go through some comps, have them ready for an appraiser in case they come back and they say this is a little bit lower than we thought or a little shaky. We always want to be ready for that. So what I'll actually do is reach out to an appraisal panel that may not actually get the order, but it'll be people that will have the ability to look at the whole market, see what the values are, and they'll give me an idea of whether we're going to get close or whether we're going to be far off before the buyer's even out of attorney review.
Right.
So it gives us a little bit more comfort. When you have to waive that contingency, it can get very uncomfortable. But if you know that you've got a few different resources available or options available to you, and that we're not just flying by the seat of our pants with waiving those conditions, those contingencies, it's a little less nerve-wracking.
Right. Exactly. So, okay, let's continue. We do have one question. We're going to go through one more slide, 2 more slides, and then we'll answer. If you are a seller, this is my home selling strategy that we can go over. Just contact me, and it's something called the marketing difference. So just get in touch and we can kind of go through that. So now we can go over the questions. And so here we have, what is the better option instead of buying a house, an apartment, or a condo for investment? And then, well, let's do that one first. So I am actually an investor. And the benefit is because you're going to be making money. Somebody else is paying your mortgage, right? You're not paying your mortgage. The rent that you have that's coming in for that investment property should hopefully cover your investment. And there's something, and this is definitely for a different webinar, but something called cap rate, where you will find out which something is called the NOI, which is your expenses that are in that property and what money you're coming out with at the end of the day. So the investment is something that's really great. It gives people a sense of security that something you'll always have and that you can sell in the future if something happens and you need it. So that'd be a little bit, sometimes people get an investment property before they get their own house that they're going to live in, right? Because, and you can also doing something what's called leverage, right? So you can take that investment property, leverage the money from that one to buy another one and create that wealth, so that hopefully that answers that question. The next one, is it possible to make a coalition with friends or family to purchase a home? If yes, what could be the requirement? So, James, you can talk about a little bit of two people buying a house. I can weigh in a little bit. Maybe so let's talk about it in terms
Yeah,
of.
so we can absolutely help on that. I think also just to add to your point, which was great on the first question, I think when you're looking at buying either a house or apartment or a condo as an investment, looking at the area is key because we want to look at that return and that the cap rate and everything you just mentioned, the ROI, that's primary stuff that you need to be paying attention to as a real estate investor. Single family home, you're going to have a 2 mile square radius that's going to use to impact your price. Condo or apartments, you're within that development, and your value is going to come from those selling within that development. So potential for a little bit higher increase in appreciation on a single family, maybe, but it all depends on the areas that you're looking at. As far as the coalition, the second question, you can absolutely have multiple borrowers in on the transaction. So we would just have, so if there were, family members that wanted to help buy a property, they could absolutely do that. If it was a family total that said we want to buy this as a family, you can have multiple buyers, multiple borrowers. Everybody is subject to the same requirements, the conditions of, checking credit, evaluating DTI, carrying debt, carrying income. So as far as additional requirements, for the most part, there really wouldn't be anything in addition. It would just be the same information would be needed for all borrowers. I believe you can go up to 4 borrowers on a transaction. You may be able to have more, but then that gets you into different kind of loan products, and you may not want to be looking at those for your first home. But as far as is it possible? Yes, it is possible to go in with non-occupying co-borrowers or occupying co-borrowers, meaning someone who's going to co-sign but not live in the house, non-occupying, and then family members that will live in that house with you, they would be occupying co-borrowers.
Right.
The additional requirements there wouldn't
And
be an
then
additional.
you can also purchase a property, and let's say only one person is on the mortgage, but you can have 3 people on the deed or 2 people on
Sure.
the. So that's something different where someone might be able to not give you monetary value toward that property, but you want to put them on the deed for some reason.
Mhm.
So there's a lot of different options you can do in terms of being an investor. And then you can decide whether you want to put it under an LLC or how you're structuring it. And that I kind of get into, like, talk to an attorney and they can explain to you all the different ways that you can purchase a property with someone, whether you're married, not married. I can tell you, do not enter into any agreement in purchasing a property until you fully understand everything and have spoken to a lawyer, and make sure if something happens that needs to be dissolved, that everything is written in an agreement. Because I unfortunately just, had a lovely couple who purchased a home and now they're separating. And so now there was nothing in writing at the time when I said to them, you have to have something in writing. What if something happens? And when someone's in love, they don't think about the bad part of it. And I'm always kind of saying, well, it could happen, so protect yourself. And really, that's all it is: protect yourself in any kind of investment, and seek an attorney. Even though, like in New York, we have to have an attorney state. A lot of parts of New Jersey, you do not have an attorney, and I always suggest someone has an attorney,
Oh,
because you want to be protected. Does anybody else have any questions? No, wonderful. I hope you all enjoyed this webinar. You're also going to get a copy of it, so that you can watch it again. And we thank you so much for being here.
Thank you, everybody. And Laurie, thank you
Yep.
for putting this on.
Yeah, thanks, Laurie.
You're welcome.
thank you for that opportunity. I'm so really happy to have those information. And also it will going to help us to know how to research a house and know how to manage our portfolio.
But